What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be taking a look at SoFi Technologies, and personally, this is a company that I do own and I do like. I think it has a lot of potential in front of it, and what we are going to do in this video is we are going to take a look at SoFi Technologies compared to the rest of the banking sector, how all the stocks have performed, whether it's Bank of America, JP Morgan, Ally Bank. We're going to take a look at all of that. Then we're going to dive into their earnings and where SoFi's earnings are projected to go. We also have some interesting things when we look at analyst price targets for SoFi. And then finally, at the end of this video, we are going to take a look at student loans because student loans are now going to be reactivated. So we're going to see how that could potentially affect SoFi's revenue as well as their profitability. So if you enjoy the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at SoFi's stock chart. We can see here today, they made a massive move of almost 5% in the upward direction. If we look at the last 5 days, it gets even more insane. They are up 14.5%. Over the last month, even more insane, they have made a 50% move in the upward direction. Over the last 6 months, we can see that they are up almost 90%. This is absolutely insane. When we look at the last year, we can see that they are only up around 33%, which is still a very nice move for this company. So as I mentioned, SoFi is up 50% in the last month, and we have seen banks get really destroyed over the last few months as we have had this bank run that has kind of been looming over the market. So let's go ahead and jump into some other major banks and how much they have moved up in the last month. Let's start off by taking a look at Bank of America. We can see over the last month, they are up around 5.5%. And when we think about Bank of America and how they were affected by this potential bank run, it really was not as significant as a lot of the smaller banks. However, when we compare them to a lot of the larger banks, Bank of America was hit in a fairly significant way. We can see if we look at the 6-month chart that the stock is down around 10%. And from the highs that we saw in February to the lows we saw in March, the stock went down almost 27%. However, from this kind of bottom point to where we're trading at now, it's only moved up around 8.5%. Next up, we have JP Morgan, and JP Morgan actually held up very well with this bank run situation. They did not hold a lot of government bonds, and that was really one of their biggest benefits and why a lot of investors were not too worried about JP Morgan. So we can see over the last month, they have moved up a little over 3%. And when we look at the last 6 months, they're up around 6.5%. We could see back when this bank run situation was kind of going on, they experienced a dip of around 13%, but very quickly, the stock reacted back to the upside and moved back up around 13%. Next up, we have Ally Financial, and Ally Financial is a smaller bank. They are sitting at a market cap of around $8.5 billion. And when we think of smaller banks, a lot of times investors get a little bit more worried because they don't have as much capital on their balance sheets, and a lot of times the Fed will not step in to really backstop smaller banks. They're really focused on big banks that can have a really drastic effect on the economy if they were to fail. So Ally experienced a little bit more volatility over the last 6 months. We can see here in the last month, they are up around 12.5%. When we look at the last 6 months, from the highs in February to the lows in March, they moved down almost 40%. However, from these lows, they have recovered 27% and are sitting at a price right now of around $28.40. So overall, the banking sector in general has reacted very positively over the last couple of months as a lot of this bank run situation has really started to subside. When we look at SoFi's earnings, we haven't really seen much adjustment there. We can see that their average earnings estimate from analysts is sitting right now at minus 18 cents for the current fiscal year. When we look at the low estimate, it's sitting at minus 32 cents. And even the high estimate, people are still expecting a net loss from SoFi, and they have it projected at 10 cents in losses. And we have a very wide spread for next fiscal year's earnings. We can see that analysts right now are expecting 0 cents on average to be the earnings. We have a low estimate of minus 18 cents, and then we have a very positive high estimate of around 25 cents in positive EPS expected from SoFi. One thing to consider with these EPS numbers as well as the revenue numbers is I don't believe they are currently taking into account that student loan moratorium is being lifted, and that is something that could have a drastic effect on some of these numbers, which we'll take a look at here in a minute. Before we jump into the student loan news, I wanted to go over analyst price targets. So here on NASDAQ.com, they have an average price target of $7.29, a low price target of $3, and a high price target of $10. And what's important in my mind is this average price target of $7.29. The market is currently trading around $8 for SoFi's stock, and often oftentimes what you'll run into with analysts is they like to keep their price targets in line with where the market is trading. So if the market is trading up, they want to put their price target above where the stock is trading at. If the market is tending to trade down, then they'll lower their price target to below where the stock is trading at. And that is something you kind of run into and really can cause very interesting moves from stocks, because when you see analysts start moving their price targets above where stocks are currently trading at, oftentimes you'll get a reaction from the stock as well, where it will try and move up to kind of match where those analysts are projecting it to be trading at in a year. And that's one of those things to keep in mind, because you can kind of get into this cycle as analysts raise their price targets, the stock moves up. And obviously we need to see fundamentals follow that. That is something that's very, very important. So this next earnings call will be very important to the stock price, because it will really tell analysts whether they do need to move up their price targets because earnings are coming in better than expected, or if they are falling in line with what is being expected from the market. And one thing that could have a very large effect on SoFi's earnings is the student loan moratorium being lifted. It is projected by SoFi that the moratorium cost the company over $400 million. Because of this, a few months back, SoFi sued the US Department of Education to end the 3-year-old pause on loan repayments, claiming in a recent lawsuit that the moratorium had no legal standing and had severely curtailed SoFi's loan refinancing business. Over the last 2.5 years, the moratorium has been extended 8 times, and SoFi estimates that it has cost the company between $300 to $400 million in revenue, which translates to around $150 to $200 million in profit. When we take those numbers and translate them over 2.5 years, we can see that 400 million divided by 2.5, we get around $160 million in revenue lost each year. And when we take 200 divided by 2.5, we get around $80 million in profit lost each year. So what we can do is we can compare that number and really distribute it over the last couple of years and see where their net losses would have been at. So for 2021, they had a net loss of $483 million. If we add 80 million onto that, we can see that they would be at $400 million in net losses. And for 2022, they came in with $320 million in net losses. And again, if we add 80 million onto that, we'd be sitting at around $240 million in net losses. What's more important is where the company is headed in the future, and management raised their guidance this last earnings call. We can see that they expect revenue to come in around $1.955 to $2.02 billion, which is up from $1.925 to $2 billion. They also expect their EBITDA to increase to $268 to $288 million. That is up from $260 to $280 million. It's important to keep in mind that these numbers came in before the moratorium was lifted. So I would expect that next earnings call, we see guidance to come up even more. And I think overall that could have a very good impact on the stock price. So with all that said, I do think SoFi is getting close to a lot of big factors that could be catalysts for the stock price. The biggest one being profitability. I think they're getting very, very close, and I love the idea of SoFi getting to profitability by the end of the year. A lot of people over the last couple of years have said it's not going to be till 2025, 2026, somewhere in there that SoFi would start hitting profitability. And I think the fact that they are getting so close to it right now is very positive, and that could have a big impact on the stock price. I think that we will see investors, once they start getting to profitability, start jumping into the company like we have seen with Palantir and a lot of other large companies. In my opinion, does SoFi have the hype as much as Palantir does? Probably not. I also don't think the business has as much upside as Palantir has, but that's just my opinion. I think that SoFi, being in the banking industry, is a little bit more regulated, and you don't see the same type of moves that you see from a lot of these larger tech companies. So that is all my opinion. Let me know your thoughts in the comments down below. Always keep in mind, I do own this company, so that is one bias that I personally have, and never take advice or buy a stock just because some random guy on YouTube talked about it. Make sure you are doing your own research, as well as looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.